Today's focus is going to be on streaming companies, and no, we're not talking about Netflix or Disney+, but streaming in the mining sector. A precious metals streaming company such as Wheaton Precious Metals provides financing to mining companies in exchange for the right to purchase a percentage of their future production at a predetermined price. In return, the streaming company will receive a portion of the metal produced. The streaming company will also pay an upfront cash payment to the mining company, which is used to finance their mining operations. So why would an investor look at a streaming company? Well, they're not exposed to the operational risks that mining companies face, such as permitting, labor disputes, and natural disasters. Wheaton Precious Metals is one of the world's largest metal streaming companies. The company was founded in 2004 and is headquartered right here in Vancouver, Canada. It has streaming agreements all over the world in places including Canada, Mexico, and Chile. Their business model allows it to participate in the mining industry while minimizing the risks and capital expenditures associated with a traditional mining operation. Today we have CG analyst Carey Macrury here to discuss Wheaton and its performance in the streaming space. Carey, thank you for joining us today, and we look forward to learning a little bit more about Wheaton Precious Metals. What are some of the pros and cons of streaming companies?
Yeah, so if you look at over the long term, I mean, the streaming companies have been big outperformers relative to the mining companies, and really there's a couple of reasons for that. Number one, it really is a lower risk business. If you look at the streaming companies, once you've acquired a stream, you don't have to operate the mine, you don't have an exposure to the capital costs, the operating costs. So the margins of the streaming company tend to be 70 or 80% of the cash flow you get to keep effectively. If you think about a mining company, that number is more like 40 to 45%. Secondly, really it's the ability to grow. And if you look at all the streaming companies, they've grown pretty substantially over the last 10, 15 years. And then thirdly, I would just say diversification. A mining company typically has, there's a lot of companies with one or two assets. Even the big ones maybe have 10 or 12. The royalty and streaming companies have dozens of paying assets. So they're really better diversified across countries, across counterparties, and across different assets.
Carey, Wheaton stock has outperformed a multitude of asset classes, and why do you think that is?
Yeah, so given the industry, I would say what's unique about Wheaton, they really were the pioneer of the streaming model. They started back in 2004, so they really had first mover advantage to grow and really, define how the streaming model works. And since its inception, it's kind of had different variations that, have worked better for different mining companies. So it's really taken on a life of its own as a way to fund projects. It's now an accepted funding mechanism alongside debt and alongside equity. I would say the second thing about Wheaton particularly is they've really got a solid portfolio across their counterparties. These are top tier counterparties. This is like Newmont's of the world, Vale, Glencore. And these are tier one assets in a lot of cases, multi-decade assets where they're going to be generating revenue for decades to come.
So Carey, what are some of Wheaton's upcoming catalysts?
Main catalyst for Wheaton is really just continuation of growth. I mean, if we look at our forecast, we expect them to grow 30% over the next 5 years, and that's from deals they've already done. So that doesn't include, any future deals they may do. So that's really going to continue to grow their cash flow and revenue going forward. And at the same time, again, we expect them to do more deals. They've got over $600 million in cash. They have no debts. They have a $2 billion credit facility, and they're generating, $200 million a quarter. So that they certainly have a lot of firepower to continue to do more deals and continue to grow.
Carey, thank you so much for joining us today. We always appreciate your insight.
Sure, no problem. Thank you for having me.
CG analysts currently have a buy rating on Wheaton Precious Metals. And thank you all for tuning in. And as always, like and subscribe to be kept up to date with our upcoming videos.